Hey, Daniel. Hello, everybody. Greg, I'm also sticking to my guns on Tesla too. It's been a rough ride the last 2 days, but that's what trading's all about, I guess. You got to just trust the pattern, and just look at price. You know, when you're looking at the emotions of the market, it's really hard. And I've decided to risk to those reversal highs around 772. So we had a reversal today. So maybe things will get started on the downside. We'll take a look at that in a minute. So I'm all in on Tesla. I'm looking at the big picture, but you know, sometimes you just got to endure just all of this back and forth between, you know, before it gets going. So that is usually my my weakness, I think. I pretty much spot direction very, very well. I know where else, you know, pretty much everything where everything's going to go. It's just I see it, and then I see it so clearly in my mind. So I think everybody else is seeing it clearly, and so I get all positioned, and then it could take 3 weeks or 3 months or 9 months until everything I'm seeing gets going. And you know, I've spent decades trying to reconcile that, and I still can, because there's a part of me that's still very kind of emotional. And you know, if I see something, I feel like I just got to jump on top of it. All right, I guess we're right on the hour and a half hour. So welcome to today's live event. This is the second of our 3-day live trade execution webinar series. My name is Mark Shawson, the Pattern Trader. Yesterday, I discussed how I evaluate all market opportunities. I don't care if it's the oil market or the euro yen or Adobe stock or Tesla or what have you. I'm just looking purely at price and price action. It's my philosophy that price is a discounting mechanism. Price is ahead of the news. This is something that is very difficult for a lot of people to grapple with, that the market does what it's going to do. So we've had a huge down market from November till, you know, now in June. 6 months we've had the market being pummeled. So now you had Jerome Powell, you know, testify today, and it was pretty basically bearish. He said we're likely to go into a recession and whatever. So does that mean that, you know, you kind of, you know, go short the markets now? Probably, but the thing is, the markets are perverse, right? So by the time a news item comes out and the market's already done its work and is discounted that, then it could go the other way. So trading is all about price, and really all it comes down to, as I shared with you, you know, yesterday, is risk and reward. We can talk, you know, all kinds of concepts, but it always comes down to finding something that makes sense and then waiting for an area where you can see a very small level of risk for a very big opportunity. So let's go through it. I did put, again, the strategy worksheet that I handed out yesterday. I put a link in the chat box so you can see the patterns and the scientific basis behind what I'm doing. So Alan says, what do you mean by discounting? It means that the prices have already calculated whatever's happening. So whatever is announced at the moment, you know, you'll think, well, the market should go that way because that announcement, you know, has this kind of implication. But if the market's already been discounting it, already taking into account whatever has happened, then it could go the other way. So even though it could be good news, the market may have already discounted it. And so the markets are just ahead of the news. Whatever's happening in the markets, the market has already told you. So, you know, when we get Tesla's next report, really it actually doesn't make, there are a lot of concepts that are going on in stocks, right? So stocks trade on price, but they also trade on a multiple of their price, right? So I don't want to kind of get too in the weeds. And let me just share with you what I did. So I'm very short Tesla. I've got 3,900 shares. I've got a position worth $2.73 million. And This is not a demo account, right? This is as real as a heart attack. I couldn't make something like this up. So I'm also short Moderna. I'm short some Tesla puts. I bought the put options, 650 expiration for July. So I give myself a couple of weeks for this thing to get under 650. And I've done some other things, buying some silver put options that I've got 2 days until I either see I make money or I lose all of it. So I'm also long the euro yen, I'm short silver, long the dollar yen, and short some gold, and those are my positions there. So again, I look at everything on the basis of price, right? So the markets are at, or certainly the stock market, which I find, other than the yen pairs, I find myself increasingly just focusing on the stock market. But I'm also trading now silver and the yen. So I look at everything, and I look at everything the same way based on price action and price patterns. But the stock market has, you know, if you turn on the TV and you listen to 1,000 analysts behind me, one guy will say, we're going to a recession. We're not. This is a buying opportunity. And so what do? Well, you can't listen to any of them. Nobody really knows, but the market knows. So the market is a discounting mechanism, meaning, Alan, so, you know, when the market started rolling here, you know, we really didn't know anything about Fed policy. We didn't know that, you know, the Fed was going to, you know, begin a rate hike regime. We didn't know that crude oil was going to go from 80 to 130. We didn't know, but, you know, in the omniscient nature of the market, it started to know. It started to top out and start giving us various patterns that alerted us to this way before the news became apparent. So by the time you're reading right here about, you know, crude oil or whatever, that's been discounted. The market could go up now. So as bearish as I am, we're in an area where, you know, it's a very random area. The market could go anywhere. I like, you know, getting areas where I can understand where the risk is, where you get a very tight pocket, where that week the market topped out. The next week it kind of crept up to that top and I shorted it right there. So you can't get more precise than that. The problem is sometimes the markets then do their thing, which I was expecting, and now it becomes much more random. Does it continue to go down? Does it go up? Does it, what have you? I mean, there is a chance here that, you know, we still go higher, even though I'm extremely bearish. And I think that all rallies should be sold, but, you know, it could easily rally the S&P back to 4,000. I could see that happening and still be a rally in a bear market. But again, I am very, very bearish this market, you know, so Powell doesn't know, analysts don't know, nobody knows, but to me, the market is speaking very loudly. And so I'm just listening to the market. And what the market's telling me is it's put on this pattern. It looks just, makes one top, retreats, makes another top and retreats. Now, you'll say, well, you know, it's not really a double top. One high is lower than that. Doesn't really matter. If I stand back and said, you know, does this look like the letter M? You'd say, yeah. It looks like the letter M. That's a double top. And, you know, so if the market has just topped here and done all of this work to roll over and top, it's not just going to bottom here and then, you know, go back up. That's not how markets work. So it's very, you know, like I said, we could, you know, come back and retreat back to this breakout area, and it could still be very much in a bear market. In fact, I almost wish it would, although I got these short Tesla positions, so I'm kind of hoping it doesn't. But forget about what I want or what I hope or whatever. I'm just looking at what the markets are telling me. Now, in addition to this double top, which in and of itself is a very bearish thing, what I see is this shoulder here. Then this whole thing to me constitutes a top, and then this is a head and shoulder. So it kind of looks, again, like a man or woman's head and shoulders. And then the line through it is simply called the neckline. But what we see here is a case where the right shoulder is sitting below the left. So you kind of have this asymmetric head and shoulders. In which case now it creates a downward sloping neckline. Now, both of these are bearish patterns where you see, whether you see a head and shoulders with a horizontal thing or a down sloping, All this downsloping means to me is that this is going to go down and a lot harder and a lot quicker by virtue of that downsloping implication. So if I run this neckline, if I just cross all of these lows through this pattern, you can see now we've gone 6 months lower, and every day, all day long on this TV channel, they're talking about, is this a bottom? Where's the bottom? Are we close to a bottom? Well, we can't just spend 6 months making a top and then it's over. It doesn't work that way. This top has just been formed. And once you come through the neckline here, that means the gun has just been fired. That means this bearish pattern has just been completed and we haven't begun to sell off yet. As crazy as that might sound. Now, you know, the thing is that the markets are a dynamic process. So it's very, what I've learned is that you see these textbooks in a pattern, in a textbook, like the ones I showed you, and they have certain implications. But, you know, the market is a dynamic thing. And so I look and see, how does the market respond to this pattern? So if I see a pattern, then, you know, I expect this kind of behavior following the pattern. If I see something like this where it breaks out, kind of does this and starts going the other way, all kinds of red flashing signs start occurring to me. Meaning if, you know, we started digging in here and this started kind of going up here and started breaking with what, you know, my boundaries tell, then I'm not going to say, well, I'm right and the market's wrong. So this is a dynamic process. I put my boundaries and my parameters around a chart, and then I see how does the market. So once I kind of see the chart, then I stand back and watch how does the chart play within the context of what I'm looking at. So first off, it did break out here. Now, very often, you know, charts will break through the neckline. And just like the first, you know, soldiers in a war, they'll get sacrificed. Everybody gets very excited. Then you get a bit of a trap and you break back to the thing. But the thing is that, you know, once you kind of pull, once you kind of go through this low, this kind of confirms that this is game on. And this is going to, you know, keep going. But as I said, we're at a very complicated space here. It's not a, you know, it's just in a no man's land. So, you know, if you're, you know, on a tennis court, you either want to be at the net or, you know, at the baseline. You don't want to be, you know, somewhere in the middle, because, you know, the ball will land at your feet or in your face. So, you know, there are just some times where we have to wait for the market to give us more information. You know, I could very easily see that we've grabbed a bit of a foothold in here, and I could see a recoil, fill this gap and whatever. But, you know, on the other hand, I'm extremely bearish. So you kind of look for the market to create, you know, risk reward setups. And there, you know, I just wait when something has now gone, when the market has gone in the direction you think. Now, in order to put on the next thing, you need to wait. You need to wait for some signal where you get a pullback, you get some kind of reversal, and now you kind of can get back on the horse again, where you kind of understand your entry, you understand your risk. And right now we're just, you know, it could do anything. But, you know, I am very, very bearish. I am probably more bearish than most people out here. So, you know, to Alan's point, you know, what does discounting mean? So as bearish as I might be, and as much as I might think, well, we're going into recession and we've already had so much carnage. So whatever the market thinks, by the time we know we're in the recession, the market will already be recovering it. The market will already be going up before we formally know the recession is over. So the market is always ahead of the information. So by the time you get it and you read it in the Wall Street Journal, the market's already moved. I mean, if we could all go downstairs and, you know, buy the Wall Street Journal and, you know, and trade off what it says, we'd all be wealthy. The market doesn't work that way. The market starts discounting. The market starts cratering here before we even know why it's cratering. And so that's why you have to look at price. Understanding a balance sheet up here or here is not going to do you any good. So, you know, one of the big stocks that I've been trading, and, you know, one of the my fellow boiler room members here. Greg is in this webinar. So I do an early morning session called the boiler room, where I look at the markets before the day starts and we assess what's going on. And sometimes you can buy the markets, we can do an arbitrage, meaning that I have a set of stocks that I want to buy and a set of stocks I want to sell. And so when the market goes higher, I kind of look at that as that higher opening as, getting a leg up on all the things that I want to sell. Conversely, if the market opens way lower and I can see something I want to buy, I can get a, better opportunity on that. But that's a whole other deal. And so every day I do an early morning session. It's called the boiler room. And, it's just part of the elite package. And if people are interested in becoming an elite member, we'll talk to you about it after tomorrow's webinar. I'm not going to sell you anything. Don't worry. I'm not going to bang you over the head for anything. I make my living by trading the markets. So whether, you want to join our family, it's entirely up to you. So this is Tesla, right? So I've been saying for weeks and months that, this is a bubble that is about to go pop. I just see a lot of bearish on that. First off, this is a weekly chart. So that means each one of these price bars represents 1 month in time, 1 week in time. So it gives us a much bigger global view than if I just looked at Tesla on a 15-minute chart. We looked at it yesterday and, I couldn't tell if it was going to go up or down or sideways. But if you pull back, you can start adding context to what we're seeing and what's happening in here. So what I'm seeing in Tesla right at the top is this Eve and Adam double top. So what's an Eve and Adam? So it just sounds fancy. It's just a technical jargon. So an Eve is when you have multiple attempts at one resistance level. And the Adam is when you have a single attempt. But it doesn't matter. It's just a double top. Makes a peak, pulls back from the peak, hits that peak, and now we've made a top. So this is probably going to be the all-time high for a long time. I don't know what's going to happen 5 years from now, but for a long period of time, this is put in a top. So now this is what I call my governing pattern. This, to me, the knowledge of this governs what I do. Now, that's not to say that I won't buy this in certain areas, but in the main, I know that the main secular trend now is going to be lower. Now, you could get into a whole bunch of sideways stuff, but to me, it's going to break lower by virtue of the knowledge of these patterns. So we put that double top there, and then, the market takes a long time to, get where it wants to go. So put in a top, then it actually came and did another top. So you have a series of this whole area above 1,000. That's what I call a distribution. The inside guys, Elon Musk is going to be happy to sell his stock to you up here. And he did. He dumped like $16 billion worth of stock. And so that's a distribution area. So now we look at this whole, so to me, I look at now this whole thing as a top. And so if we draw a neckline literally through the low part here, which is this price bar in the middle, we have this line. So it's about at 700. So you can see that we are trading right at this inflection point. So I don't know what it's going to do tomorrow or a week from now. I mean, it could still, bang for a while. I mean, you can see markets go into these very, kind of noisy, things without resolution. When I mean resolution, finally breaks out one way or another. But I do feel that this noise will resolve itself to the downside by virtue of this. So I'm just observing. I don't know what the balance sheet is. I don't know what the prospects for Tesla is. I don't know how many new batteries they're making. I don't know how many cars they're going to sell tomorrow. I don't really care. The market is doing all of that homework for me. Now, right in the middle of all this, Greg, what I'm focusing on are these two reversals right here. So, for the last 2 days, so I got short at a really good point last week. Kind of stayed in, and I should have known that we were at this little support area. There's a lot of noise in here. And I just thought, well, this thing is, even if it pops around here, that it would be, kind of like this. But instead, we went straight up. And so I, was a winning position, now went into a losing position. I got in average price around 700 and about 690. And today it hits 740. So, you'll say, well, do you put a stop? I have a mental stop because, in this, kind of banging area, you can lose a lot of money and it not do anything. So I feel like I'm pretty confident that I understand the cards that I'm holding here, and that, if it exceeded these highs, I would be tap out. I would, tap out of my position. But for right now, I'm trying to hold this position, and I do think that it's going to break to the downside, and we'll just have to see how everything resolves itself. So, the ranges in Tesla are so big that you can just keep getting stopped out, and then die a death of 1,000 paper cuts. So what I do is I have a global picture, of what this thing is, and according to the way I understand things, this should eventually go according to that picture. I can't control, what it does, in the interim. These are all big moves, but in the context of things, they're really not. They're nothing. They're blips on the radar. So, the problem is I have a huge position, and so those moves are pretty consequential, and so it's not nice to sit through them. But I'm looking again at what is really dictating or governing this thing. What is governing? What are the big, and there's just 1,000 of these bear patterns in the stock, and then more recently you have another one here. So this I think this key reversal on the weekly is about 772. So in my mind, that's, where, if this thing was going to, go through that, then, I was going to tap out. And now you kind of reversed. You made a new high for the day. You close on the low. But again, this needs more time. Markets just don't cut through all of this stuff like a knife through butter. It needs more separation. So tomorrow we could see the same thing where it goes higher again. Now I got to worry if it's, retraces and ends up like this. But, if that's what we look like at the end of tomorrow, I will actually add to my position. So, now it's just, could be just a constant grinding thing, but I just expect less energy on the rallies. Every rally now is kind of, so you have one high, then it goes to another high, then it goes to another high. And you've kind of got this cadence of, and it's not coincidental that it probably came right to that high and stopped. So, so we'll just have to see. I think Tesla is going a lot lower. The question is, can I keep it in this cycle, or I have to wait for it to go to, 870 again and then wait for another selling opportunity? But I feel that, the game's pretty much up. So this is where the neckline comes in on that weekly chart, right under that big bar. So you can see that we're, just toggling above and below this neckline. This is a very pivotal area, the 700, because that neckline is like the referee. That basically confirms a pattern. So sometimes we see a pattern and, now you want it to go through the neckline. And what you'll have do, normally like this is that you'll go through the neckline, you'll trap people, you go back up and retest it. And then when you make a new low, like I believe the S&P has, that's when that it's game on. So, if it goes and makes a new low underneath here, which is around 620, so, 600 would make a new low, and this thing would then be a cadence of, lower highs and lower lows. And that's what you want to see in a descending market. So from the big picture, I can't, project what it's going to do in the next hour tomorrow. But all of this tells me that we are going a lot lower. And the problem is we could, do a lot more work before it gets there. So that is, the trick of trading. If they just put it on a platter, then it'd be easier. So John Louis says, why do you ignore the recent bottom? So I had a friend of mine, and it's funny, 40 minutes before this webinar, we were having a chat, and he said exactly the same thing. He says, so you don't see this as a double bottom? So Jean-Louis, that was a very good pickup, because it basically is. Prices have supported at a low. But this is what trading will throw at you. So you'll say, oh, I sat with Mark. I understand what a double top is, and I saw, saw what a double bottom is, and yeah. But then you'll get into the real market, and then the confusion will start. So so to me, I always look at what is the pattern that is governing. And this is a guy that's been trading. We came up together. We've been trading for decades together. And so it's just interesting to me how I see certain things and versus other traders, and that's what makes a market. But first off, Jean-Louis, in order for this to be a bottom, you would then have to confirm that bottom. Just like you need to confirm a top, you would need to confirm this thing. So if this thing came through 800, I would start paying attention, and then I would have to say, look, I'm tapping out, and maybe I got to get on the other side of this thing. And it wouldn't be the first time. I mean, this is sometimes a judgment call. But so when you're looking, and that's why I advocate you look at more and more time, because if I had a chart that I just saw this, I would say, wow, this is exciting. This is a bottom. But then, I look back and I see this, and then there was another one back here. And so to me, these are the real deals. So these have formed tops. This bottom is just a decoy. But here you go. Here you did form a bottom, right? And then it did break the neckline, and you did have a rally. But here's the one main difference. So the way I look at a value of a pattern is I look at and I see how do prices close within the pattern. So if we had come down here and instead of closing on the low, this bar put a stake in the ground and closed on the high, and then when we came down here, we made a low and you close like that, I would have a very different view, because you can see this guy right here told you this was actually going to go. Sometimes the market just puts a stake in the ground. So when you revisit it, so you had two reversals right at the lows, right there and right there. So this is how I would differentiate that look from this look. And so this is the constant challenge of the markets, and why I love the markets. It's always throwing things at you and forcing you to re-examine your way of looking at things. And so to me, I'm looking at this top as being pivotal. I'm seeing this reversal, hopefully as something that will hold. If it doesn't and it holds and it keeps going up, then I'm not gonna stick around. So it's at a very tough area in here. But to my mind, these are the governing position. This is the decoy. This is what sucks you in and gets you to kind of go for today's high. And then you're here and you're wondering, how did it end up down there? So, I said at the thing, I would, teach you how to capitalize on the markets, but the most, important aspect of a trader is to understand where the traps are. And so whenever you come up to an area where you have a reversal like this, sometimes it doesn't make nice. It's no trick that it just reversed right there. So I look for a series of patterns and price action within the patterns to make a determination. And when I feel like something is a solid go, then, I just put my foot on the pedal, like I did on the Qs last week, where I look at the context of the trend and then look at the price action. So, right here, you had a very small little reversal, which means nothing. But to me, it meant everything, because this is a bear market. I'm afraid of holding anything for 10 minutes. There will be times where there will be buying opportunities, but I'll know that, I want to hold them for a day or two and then get out, but you can get huge swishes. You can get 10, 15% runs, 20% runs in a stock in 2 days. So there will be times to buy it, but I'm very nervous holding anything in this market, because to me, this is a devastating bear market, and it is going to keep going much lower than people think. So, when it starts running out of steam, like it did last week, and I see this small little tiny reversal here. There's one there and one there, where on those days it made a new high and closed on the low. So as ridiculous as that might seem, I selling it here with the view that that's my risk. So in my mind, this is, my risk. And I bought puts. So the worst thing I could do was just lose the premium that I put on the puts. But I bought a ton of them. And, I didn't take a tick of, heat, and it just went straight up. And I, got 10X on that. So the problem is in here, you don't have that cluster. You kind of have a little bottom. You don't really have a good top. And so it's kind of, in the middle. It could go here, it could go there. And so, why trade when you really don't know which way it's going to go? Having said that, I still got a ton of puts. So every time this thing goes up, I just sell. I just sell. I don't believe in any rally. I think this is going to be a lot weaker than people think. And every time it sells and gets to a resistance area, I just sell into that resistance. I buy puts. And if I'm wrong, I'm going to lose the value of the puts. So I bought the 275s for Friday. So, in any kind of flush tomorrow, I will just, start bailing out of it, because it's a very tough area. You've got resistance here and you got support here. So that just means that there's just, a lot of noise in here. So I try and find trades where I know where, if I get in here, that I've got a small risk for a much bigger offset. And that's what trading is. We can trade it. We can talk about Tesla. We can talk about all the fancy ideas in the world. Trading comes down to risk and reward. And what I look for is a pattern within the context of what I'm looking at, which then tells me which way to get on the side of something. So once I see that double top, I am getting short here and going for a huge bus ride on that. And that's what I'm looking for in my trading. I'm looking where, prices coil in a certain area where I can see an entry here, an exit there, and an opportunity like that. And that's really what trading comes down to, finding the minimum amount of risk for the maximum amount of reward. But the problem is most people aren't doing that, right? So people are trading, FX for 7 pips or 15 pips or 20 pips. Nobody I've ever known, trades for over 100 pips. And, you look at my review website and people say, before you, I never made 100, pips on a trade. I don't take an FX trade unless I can make 150 pips. If I can't see a pathway where I'm going to make 150 pips, I do not enter that trade. And so, I will typically risk 50 pips for that 150. So in this way, I have an exchange of 3 to 1. So I don't have to win on every trade. So if you set up every trade where your opportunity is 3 times your risk, you can actually lose 72% of your money, 72% of your trades, and still be a winner. So I made 7 figures on this trade. And then I just threw away all kinds of stuff on silver this week and, 20 grand here and whatever. And it probably will blow up in my face. But what I made on this trade is, 10 times what I'm going to give away on, all the other ones. So the idea is to find these trades. You don't have to trade every day, is to just seize on these trades. And, that is what will make you money on a sustainable basis. You cannot trade 5 times a day for 7 pips, and fight the broker because he's taking 3 pips out of every pair. So you're, so most people are trying to make 15 pips, but then they got to risk 15 pips. So they got a 1-to-1 kind of exchange. In this case, you got to win 90% of your trades. Not going to happen. I just have to win 1 out of 10, if I get something like that. So I take shots all over the place. Some bets work, some don't. But when they pay, they pay. So I talked also about the euro yen. On Monday, I advised our members to, trying to find where the, no, that wasn't it. I don't know where I put those trades. Demand destruction, this might be it. So this is what my emails look like. This is a Sunday email where I include a video of all of my ideas, a chart of the wealth destruction that's gone on. And this was my setup on Sunday night. I said, just buy it anywhere. Buy it at 142.01 on a stop. I said, aggressive traders should look to, look at the sell-offs as an opportunity. And today we had a huge sell-off and then it closed right on the high again. So if you were just buying that dip, so I was advising our members to buy it at 142.01. It should have said buy stop on a stop. And you can see on the daily chart, so on the weekly chart, this is what I was looking at as, a huge setup. And I've been, telling our members that this is going to be a once in a decade move in these yen pairs. So here is this huge double bottom inverted head and shoulders. So it's just an upside down version of a double top head and shoulders. So inverted head and shoulders looks like this, just an upside down version. So this is a bullish pattern. When you see this, this is a reversal from a down move to an up move. So once it hit the neckline, you had confirmation. Now, sometimes this is what markets will do. They will kind of trundle around the neckline, just like, Tesla's doing now. And you can see this took months and months. This is a weekly chart. So this was from March of one year to April of the next. So this took a year. So I hope this is not what we're in for in Tesla, but this is what could happen. When you hit a neckline, the market will tend to oscillate around that line, above and below. And so this was an opportunity, and you see that huge key reversal there. And so now this thing has broken out. Once it broke above these highs, it then solidified that this was a real breakout. And again, it retested this thing. And this is what markets do. They break out of an area, they come back, they retest it. And then when it goes through again, now it confirms that it's going on to the next level. So last week, when I saw this key reversal, I sent out that email to buy it. And what I mean by key reversal, you can see that in the week earlier, prices went to a new low, but by the end of the week, the buyers were in control. So to me, that's just a bar that's pointing in the direction where the market wants to go. But I don't look at that reversal in a vacuum. I'm looking at the pattern and the trend and everything else behind it. So to me, it looks scary up here. And you do have these big counter trend moves, but I'm advising our members to, if they're in the mood to be aggressive, to add to their trade. So this is how I'll get a core position, and then I'll keep adding to it if it's good. So yes, you can say, well, isn't this a double top? Well, it is, but again, a double top will only be confirmed if it comes through here and comes through the neckline. And I don't think this is a double top. This is an area where it's going to pause, and you can see there is a lot of volatility, because you can see this is a daily bar where we pulled back all the way down here, and by the end of the day, we ended up there. So we pulled back 200 pips, and by the end, so the way I look at these reversals is that these guys today took all the risk and showed me where the risk is. So when I get in here, I feel like, this thing has been de-risked. And when I get in, I know exactly where the risk is. So, trading is all about, joining the momentum and then understanding the risk. Where this is going to go from here, how high, when, in what time frame, those are the unknowns. Those I can't control. But I can control getting in the trade here and understanding my risk is there. And so if you have those two knowns, then you can set up your trade. So that's how I, whether it's a Euro Yen or Tesla or the S&P, this is how I apply. I don't care what the Bank of Japan is saying. I don't care what Powell's saying. I don't know what inflation is going to be or it's not going to be. I don't know if we are going to have a recession or not. I don't really care. I'm just looking at risk reward setups on multiple different trading instruments. And to me, it's all about risk and reward. If I see a direction, a pattern, and a trend, and then a bar that then dials down the risk for me, tells me exactly where to get in and what my risk is, that's what I'm looking for. Paulsburg. So are there any questions on this? So Duncan says, so John Duncan says, what do you mean by bear market rally? So when something, so I'm not saying the S&P will never go up again. In fact, it will probably have some vicious up moves. But these are moves within the bear market. So you have to understand that the macro, the global, the big picture is down. If I said to a 6-year-old, what is the trend in this? You'd have to say that it's lower. But that doesn't mean that you don't have all of these giant rallies. These are giant rallies, but they're all rallies that ended in lower lows. They're rallies within a bear market. So if this rallies to here, you can't say, well, Mark said this is the terrible market, it's going to go down, and now it's all the way up here. This is what markets do. They trade. They don't just go straight down. You look at a bear market, it'll go down, it'll go up, go down, go up. And these are called bear market rallies because they fake everybody out and then they go and make new lows. But they're very compelling. You can see this went up every single day. Didn't have a down day. Didn't have a down tick. It's breathtaking. When you get caught in a short covering rally, if you got short here, you're going to get taken out to the park in one of these things. So that's the problem. That is the danger with being short. These rallies are just, they're more powerful than the down move. But then they evaporate, they put on a pattern, and then they make a new low. So this is why I'm saying, this is an area where, it's random. It's got a little support, it's got resistance here, and it could do anything in here. But the point is, if this thing does go to 4,000, you can be assured I'm going to start loading up again in the expectation that it's going to do that. So you have to understand the cards you're holding, because if you're looking at that 15-minute chart or even that daily chart and you're seeing this, it can be mesmerizing where every single hour of every day, and short covering rallies are relentless. They do not let you out. And then you get out right at the top. And that's what I was afraid of with Tesla. I mean, I've got such a big position, I can't hold on it forever. And at some point, they're going to put my back up against the wall. And that's the problem. These short covering rallies can be hellacious. So it's not an easy game. But I carve a lot out of it, and you just have to know what you're doing. Jean-Louis says, do you find it more difficult to get out of a trade than getting into it? Yeah, kind of. So, at some point, and it's like I say this to myself every time, and then I still let myself get caught, because I've had so many times where I've been in Tesla, I've had $150 profits, and then you just see it, U-turn on, where it goes and then it. So this ultimately right now, it is a downtrending market, but it's ultimately very much a trading market, right? So it just bangs huge things. So the thing is, the smart thing is, if you have a position, you actually should start, unwinding it. Get 20% off here, goes down more. Get 20% off here, goes down more. Get 20% off here, so that you start unwinding it before it kind of comes back on you. So this has been the difficulty of this market. It's been these giant ranges. But what I try and do is find out when does the rally exhaust itself, and then get ready for the move. So I've been trading this ETF. It's called the IGV, and this is actually a very good proxy for the market. So this has been kind of my cheat sheet. This is what alerted me to telling our members that the market was going to come off hard. So this is an ETF that is only technology, software, Microsoft, Intuit, stocks like that. So to me, technology is what led us up, and it was the first one to curl. And so when I started seeing this, and so this started topping before the Dow did, or the NASDAQ, or the S&P. So this was my cheat sheet. That was my clue that everything was going to roll. If technology was going to roll, then everything was. So I started shorting everything. This was back in. You can see this started in August, September, October. This was topping way before the main markets rolled. So I was starting to short based on what I was seeing here in the other markets. But this thing clued me in. But this is an example of just the enormous rallies, and also how the markets throw you different looks. So you could say, so this was and this is what I'm saying to you now. This is what the S&P has formed. And this is basically on a relative basis, this is where we are now in the S&P. So this is formed a long time ago, but the S&P is just coming out of this thing. So to me, this is what the S&P still has left to do. So we'll see if that plays out. But here's the difficulty, Jean-Louis, is that, okay, so now you see this pattern, right? You're all on your bicycle, you're ready to short this thing, and now you get exactly what I'd say I look for in a bullish pattern. You get a double bottom, and you also get a price action that's commensurate with the bottom. Make a new high, made a new low, close on the high, made a new low, close on the high. So if you saw this, you'd say, now, this thing's going to smoke. And so this is why, and I think it's very apropos for looking at this double bottom in Tesla now, because the market will always put you in a challenge as to which one is ruling it, which pattern. Is this double bottom, the ruling thing, or is this head and shoulders the ruling thing? And so that's what the market does to you. And so to me, if a market has topped, it's not going to go down and just bottom here. It's, if a market is topped, by definition, it's going to take 6 months, 12 months, a year of just grinding. And then at some point, there'll be a resolution. But we're 6-9 months away from a resolution. So I don't know why people are talking about a bottom, because even if this does go to a low, it would have to do 6 months of work and all this stuff to start turning around. This is not going to be one of these things. So there's a difference between a financial down market and a recession market. This one did a V bottom. This one is going to languish. So you're going to have plenty of opportunity to buy something. So you don't have to feel urgent that you're going to miss something. Now, we're back in this area where, again, I could make the case that we are in a double bottom, and you could get a false rally here, and then you get this. So all kinds of things can go on in here. This is where I know what's happening in the big picture, but, anything could happen tomorrow, and I'd say, okay, fine. This thing could rally hard, or it could come off hard, and I could see each scenario. So this is the IGV, and so this is the looks, and so also this also had another bear pattern. This is why I knew that this thing was over, and this is what markets will. So this is called an ascending broadening pattern, where prices are ascending throughout the pattern, and then they start out narrow, and then they widen and broaden out at the top. So this is a bear pattern. I believe the S&P has this also on a monthly chart. So once we understand these patterns, so once I saw the breakout from this pattern, I picked to the exact dime where this thing was going to fall. And you can ask, I'm sure some of our members are on here, all the way back here in February, I was saying when this thing was 380, I said, we're going to 260 on this, right there. So where did I pick that number from? To me, this thing was just going to return right back to where it came from. And it went to 255 the other week. But it doesn't look like it's done. But that was my objective right here. So these charts are magic. Everything in the world, the Fed, recession. We didn't know about Ukraine. We didn't know about Putin here. We didn't know anything. I was saying this was going to go there. And it's not, I don't have any special IQ. It's just the charts tell you. And so if we look at the S&P, and then I'm going to wrap it up. If I put a monthly chart of the S&P, see, this to me looks like a wave out in the ocean. One of those big waves that is about to crash. It's just curling at the top. You see those big waves, and then you see some white on this thing, and it's about to go bang. It's not about to kind of go here, arrest itself, and then go back up. That's not how waves work. So this thing just looks like it's going to go right into the ground. So I'm a lot more bearish than most people. The thing is, it's not good to have a narrative in your brain because you can't trade objectively, because there will be a rally. There will be a huge rally, even though we're going to go down. So you can see we came down to the beginning of this bear pattern. So we've kind of come down to that low. So now the question is, have we made a low? But I don't think so. Actually, I kind of drew it in another way here. Now, when I connected it this way. So I still feel like we need to come here, 3,200 minimum. And to me, you know, markets typically overshoot. And the thing is about momentum, right? So, you know, we look for trends or we look for reversal patterns and then trade the opposite trend. So you're always just looking to go in the directional momentum of the market. The thing is that once markets start putting on momentum, I'm trying to find a color here. Once markets start, you know, pick a momentum, you know, momentum works that way, but it also works, you know, if this thing starts going like this, it's not going to just magically arrest at some number. You know, momentum starts begetting momentum. And that's the thing, you know, I think that this thing could just turn into an animal. It's just going to turn into, you know, a force. So people are looking at PEs and they look at all of these things. I look at markets as energy. And, you know, I just think that when something's in motion, man, it doesn't arrest itself so easily. And this is unwinding of leverage, unwinding of margin that's been going on for 14 years. So, you know, either this is the big one or the next one is. Either we'll come here and make a new high and then we'll go like that. But eventually, you know, this is what I'm expecting because we've just built up so much leverage in the system. So the problem is, you know, building up all of these narratives. But, you know, if the market did this, I would be a buyer. So, you know, I can spin a story as much as I want. And then tomorrow the market could give me a look and I'm on the other side of it. So I just try and observe what the market is telling me. And to me, it's saying that, you know, this is bearish. There's a top here and the top was just formed. So if the top has just been formed, how can we be at a bottom? It doesn't go like that. We're not going to V-turn, you know, do a, you know, thing. You're going to have seismic moves, you know, but to me, it's all going to be to the downside. So my mind is that every time it goes up, I'm going to be shorting it. But, you know, I'm going to look for certain price structure in order to do that. So that's what I do. Let's see, are there any other indications that you determine which side? So the dominant pattern, size of pattern, amplitude? No, it's just Ian, so basically when I open any chart, it's probably just easier to look at a weekly, it's a little bit more. When I look at a chart, you know, as I said, there are 5 phases of the market for me. A market's either going up, it's either going down, it's going sideways. So those are typically the 3 ways that people would say. But to me, there are 2 others, and this is where I make all of my money, on the turn. So if a market's going down and then it turns from a down market to an up market, but before it turns, it always puts on a pattern. And so the same thing here, if it's going up and it turns from an up market to a down market. So there are 5 phases and I will trade, you know, all of these except this. So my whole thing is that I'm trying to get a piece of the middle out of some move, a 1 to 3 day move, a 3-week move. I'll stay in a market for 3 months. You know, it depends what that thing is showing me. So I open up a chart and immediately I'm looking at millions and millions of charts and I'm just looking for something to stand out and say, okay, here's a trend. Here's a key reversal. Here's something where you can see your risk very, very clearly. And I'll just, you know, lock into that and set up some kind of matrix on some kind of trade. And, you know, so this has been, you know, a trade that you needed to be, you know, stay with the trend for 18 months. You just need to be long. And this thing, you know, it was a rising tide raises all ships, where you didn't have to be a genius, you know, like Kathy Wood and the ARK Fund. this ticker symbol ARKK. So she was the new Warren Buffett to, millennials, ARKK, sorry. So that is that is kind of like an ETF that had all of these growth things, right? All of these names. And on the way up, she made, 300%, and she became the Warren Buffett to, millennials. I accused her a year ago of being a complete fraud. And she goes on TV and she's this woman, Cathie Wood, you can Google her. She's very, very compelling in her. And this is the problem. If you listen to a woman like Cathie Wood or anybody, who's smart or smarter than me, it sounds very compelling. But to me, it's like, okay, this is what she's saying, but this is what Price is telling me. And Price is the truth. There's no hiding from Price, right? So anybody can make money in a market that's going straight up. And everybody did. So everybody's a genius. Now you really have to know what you're doing. This is a stock pickers market. Some are going up and some are going down, but you need to figure out what you're doing. So, this thing put on like a big descending wedge here. And, I was saying right up here on videos, on YouTube videos, and I shouldn't have said it, but I called her a fraud right here. And I said, look, I'd be willing to apologize. I said, I think your stock's going to go to 75 before it goes to 150. And I said, if it goes to 150, I'll send you an apology letter. Why, the apology letter is still in my inbox here, and I haven't sent it out. So you can look like a genius. Anybody can look like a genius in an up market. But this is what, it looks like on the other way around. And this is the carnage that's really been in the market. So people look at the indexes, they're down 20%. Yeah, but stuff like the ARK fund is down 80. So Price is the truth, right? People can say anything. And this woman, if you listen to her, she was very compelling, but all I was seeing was that. And so pattern to me equals trajectory. Now, in this case, it went very flowing. In the case of Tesla, it could be, a long time and then it could go. So, how a chart gets there is, pretty complicated, but it's just understanding. And so I just look at Price. Everything else is noise. You can tell me all day long, what you think, where this is going, and I'll just go and look at a price chart. So John says, I had her pegged from the start. Yeah, because, a lot of millennials, and I think she still has a lot of inflows into this ETF while it makes new lows. And, oh, thanks, Martha. Yeah. So that's basically, it. I wanted to kind of give you a set of calculators. It's all about risk management. So like I said, I boil everything down to an idea of risk and reward. So I was looking at BABA yesterday. BABA still may be a buy in here. And it's something that you can test out with not a lot of risk. So, it doesn't look so good. Yeah, I would leave this alone. I was also looking at Adobe. So, if the market goes up, I'd buy Adobe. If it goes down, I'm short Tesla. So you can see Adobe kind of broke through here. So I always look at what something does and what it doesn't do and how it sets up. And I'm not in the mood to buy anything. I'm still so bearish, but there are things that you can buy. So you can see how Adobe broke through these lows, made all-time new lows. But now, if it starts coming above here, this is what I call a bear trap, where everybody's kind of got trapped down here. But this is how you could really test it out for, very little offset. So to me, I'm looking at this key reversal, and then you've got these two inside coil bars. So to me, this is building energy. And if this is a bear trap, it should come out of here. But I don't know. I'm so bearish that I don't trust anything. And I don't really want to tell you to buy anything. But I'm just saying, for an example, and this could work, is that you could put a buy stop here and literally, put a sell stop at either, the previous day's close or under the low. But by definition of this being a narrow range bar, you've got a very small risk. So let's say you wanted to buy Adobe at 370 and your risk was 360, and you had a $10 risk on a $3,000 account size. This is a position size calculator for stocks. So it tells you, I'll put it in the chat box here, how to size your risk on stocks. So then let's say you want to risk 1% on this trade, and your entry price is I forgot what it was, 260, 270 or 370. I forgot what it was. 270, and your stop price was 260. It tells you can buy 2 shares. So if you have $3,000 and you bought 2 shares and you lost 20 bucks on that trade, you'd lose 1% or whatever that is. Your dollar. So this tells you, and you could do it also on the short side. So, you have, $5,000 account, you want to short Tesla for, a 50. So your entry price is 700, your stop price is 750, and your percentage risk is 0.5. I guess that's not going to work because you don't have enough money. But you get the idea. You can play around with these parameters. So forget Tesla, just, you want to buy Zoom at, 115. It actually doesn't look bad here with a stop price of 110. Oh, that's on the short side. If you want to go long, whatever. You get the idea. You can play around with these parameters and it'll kick out how many shares you can do. And so with the FX market, you can do the same. If you want to go to the euro yen, use this toggle bar, find your currency pair, euro yen. This is in, all kinds of currencies around the world. I'm assuming a US dollar account. You pick your account size. And, I typically advise that you only risk 0.5%. If you risk 0.5% on a trade, you have to have 10 bad trades and you still only down 5%. And then if I put wide stops, so if I get in at 142, I might put my, my stop at 140 and risk 200 pips. And people say, well, I can't risk 200 pips. And with your normal lot size, you can't, but if you, this tells you what your risk is for this amount of, so it doesn't matter if you're risking 20 pips or 200, at the end of the day, you're only going to risk 0.5%, whatever your parameters are. And this is where it's a little complicated. The lots are sized in $100,000 units for one. So if you're trading a mini lot, it's 0.1. You hit the calculate button, and this tells you that you can do 0.17 mini lots, and you would lose 25 bucks even if you got whacked up on a $200 stop. So the whole thing is risk management. So I try and trade for bigger moves and keep your position size, and that way you'll always be solvent. Where most people are trading 5 or 10 times a day, and you can die a death of 1,000 paper cuts where you're always getting stopped out. And the problem is, once you get down 20% or 30%, if you're down 30%, it takes a 50% move to get back just to even. So that's the problem. The more you start digging a hole, the harder it is to get out. So that's basically, it for me. If you, have any questions on this methodology or anything else to do with, trading, I can look at a million charts, but really this is what I do. This is the discipline I apply to, and then it becomes a bit of an instinct whether something's forming a bottom and ready to turn up like this could be a bit of a trap down here, but what I try and do is I dial between different time frames. So if I'm seeing something that looks like it's setting up here, I guarantee if I look at the weekly, I won't be that excited. So you can see how on the weekly, yeah, I'm not. So that's why I dial between these two time frames, just to get an idea of what's going on. Now, this could still have a bounce up. It could still fill this gap. So maybe there is, but you won't go wrong if you're looking at the big picture. You get all these bear market rallies, which this would be. But Daniel, you're welcome. is the Euro US a good potential double bottom trade? I think that would be probably a fake out bottom. I think the Euro is going to go a lot lower. So here again, this is where you get, these patterns, and you got to say, okay, which one really is the operating one? So to me, the big bad pattern is right up here. But at some point, these patterns do their work. You saw this huge double top head and shoulders. And once you saw this, this is the governing pattern. So this is what's a bear market rally, right? So this is the market that's going down, but you have, times where it goes higher. And so this is the governing pattern. And so now the question is, are we forming a bottom? Well, it could be. The market would tell you if you kind of crossed above this neckline, and you start. So to me, the market should do what it looks. If it's a bottom, it should go. If it's a top, it should be a top. If it starts stalling and going the other way, then, this just comes down to instinct and decades of trading. So sometimes you'll see a double bottom, and sometimes it'll go just to the neckline short of it, and then it'll go make a new low. But, until proven otherwise, this guy is still the operating pattern. So you could get, a rally up here and it's still a sale. And I don't think this is done. I think the Euro is going to go a lot lower than people think. So this is when, you now look at the monthly. So if you're a little bit unsure, I keep dialing it back to look at bigger and bigger patterns, look at, more and more time, because on a 15-minute chart or on a daily chart or even on a weekly chart, sometimes it's not clear. But then you dial back these patterns, and here's this double top head and shoulders on the monthly. So you can see it's not going to just like the S&P. It's just not going to come here, form a bottom, and go back up. This is a good metaphor, again, for the S&P. This is about where we are right now in the S&P in my mind. We're right there. So as much carnage as there's been, I think we're just starting. We've got this left. But, again, using that S&P, you can see how it broke out and then broke back. So the S&P could break from here back to 4,000 and do the same thing and give you a bunch of head fakes before it goes down again. So this is why I'm saying it's in a zone here, like here, where it's pretty ambivalent. Was this going to continue with the trend down, or was it going to go up before it went down? And so that's very applicable to what we're seeing in the stock market and my ambivalence. I know what the big picture is. I just don't know what it's going to do tomorrow. So Eduardo says, great session. I learned more from every webinar. Keep them coming. Jesse Livermore in his day. Thank you. All right. So I think I'm going to end it there. I could, look at, I'm just trying to give you a flavor. Here's another head and shoulders. So collectively, this is like Tesla, right? So this, again, is like a metaphor for Tesla, where you see all of these bear patterns, which I've seen over time. And then, yeah, you get to this, area, and so this actually just went, way through there. But, maybe Tesla's like this, where 700 is here and it keeps bouncing above and around here. But eventually, the big patterns will kick in. So this may look like a double bottom on a daily, but when you look at it, the macro picture, this is still a downtrend. Now, could it rally to here and then go? It could do anything. That's the beauty of the markets. So, and sometimes I will do a counter trend trade, where if I deem this is a tradable bottom, where you can trade it, where it goes from 105 to 111 before it craps out again, why not take 500 pips on the upside, and go for that ride? So I don't want to say that I am just so bearish that I'm never going to buy an S&P stock again. I could be, buying Adobe tomorrow. So it's just judging how much risk do you have to take on that trade, and how much offset. So the problem with me now, even if I see an Adobe, even if it goes tomorrow, I'll be worried that, if I don't reach it and grab it in time, it's all going to be taken away from me and flushed out. So I'm very nervous being long, although, the short covering rallies, in this market are huge, and there will be one in like a week or so. There'll be a setup where maybe you should buy it and get that thing. So the market is very dynamic, but I look at it, I try and try and determine what is the big picture. And then in the small time frame, you can get some kind of, counter trend thing. But if you understand what the real deal is, then you can understand that, a wave to 4,000, the S&P, is really meaningless, and it's actually an opportunity to just jump on that. So hard to explain all of this, 4 decades of trading in, a few sessions, but this is the general idea is only look at price. So the euro, there was wars here, there were COVID here, there were interest rates here, there was everything here. And I could have told you, just months and months and months and years ago what this was going to do. So this is a monthly chart. So if you understand that this was just a descending triangle right here. So you can see these are just rallies, to this kind of trend line. But this is, first off, this has been 15 years of lower highs. And until we turn that cadence around and make a new high, this is still in a downtrend. Until we take that out, this is a downtrend. But trends do end. And when they end, they put on a pattern. You had a triple bottom here, and then you had a nice ride. And it's not like I'm not going to take this ride that went on for many years just because this is in a downtrend. But if you understand the big picture over 15 years, this thing is just one big bear pattern. You've just got another neckline here. And so you've got all of this energy that's about to crater. And I think we go to 80 on this, by the way this chart looks. It's trading at 105. If you told me this when, was going to go to 75, you're going to see crazy stuff happen in this world. And that's going to equal tremendous opportunity. So there's, you can read about all this bearishness and carnage and whatever. And I do advise you to protect your wealth. If you're in mutual funds or whatever, just be careful because I think the stock market is going to get worked. But having said that, I make much more money in a bear market, because, things take an elevator, a staircase up and an elevator down. You can see this is how bear markets work. Or markets themselves work. You can spend all this time grinding, and boom, it takes it away in 4 seconds. This is what I showed in my newsletter. All of these stocks like Disney that, this was a pension holding. This was something that you would think would be a conservative thing. This is where you should put your money. And it's round trip to where it was in 2014. So you can see it took 8 years to get up there and just a few weeks to take the whole thing back. So to me, there is just so much money to be made going short and taking advantage of these things. And that's the consciousness of most people. They wait for a sell-off for an opportunity to buy. But the real money's made, if you can identify, a sell-off like Tesla. This is, hopefully what Tesla will look like, going down, because I think Tesla will be at $300. All right, guys, have a great one. We'll see you tomorrow. Thanks, Dwight.
All right, see you tomorrow, Mark.